In this video, I want to do something fun and highlight 5 of the best investors to ever live, and then explain how investing grades as we know them are already being disrupted by a different type of individual. Some of the greatest investors of all time have created immeasurable wealth for themselves, and with their success, they've helped model a way for others to achieve similar results. In this video, we'll explore a sampling of investors who used various strategies and philosophies for their trading. Some came up with new ways to analyze, while others just used instinct. The following investors, however, have consistently beaten the market, the overall goal for anyone. Successful investors all have rules for themselves and their investments, a model to guide them and protect them from their emotions. Investors such as the famous Warren Buffett focus on fundamentals without obsessing over the present value of a stock. Other investors have different ways of getting ahead. I'll go over 5 top investors and what you can learn from them. Number 1, Dennis Gartman. Ride winning stocks. Quote, "Be patient with winning trades. Be enormously impatient with losing trades. Remember, it is quite possible to make large sums trading, investing, if we are right, only 30% of the time, as long as our losses are small and our profits are large." End quote. He doesn't sell at the first sign of profits, but lets winning trades continue to run. Also, he doesn't allow a losing trade to continue to go south. Naturally, Dennis Gartman's philosophy is that losing a little bit of money on a trade in the markets is okay. But what's not okay is losing a lot of money, and you must defend against that to the best of your abilities. You don't have to be right a majority of the time. In his eyes, it's important to ride out a winning trade and get out of a losing trade quickly and correspondingly. While not perfect, if you follow Gartman's rules, the money you make on winning trades will far outpace that which you lose on poor trades. But it's important to actually pick winning trades to begin with. Number 2, Warren Buffett. Understand the company. Warren Buffett is almost unanimously the most successful investor in history. As one of the richest men in the world, when he talks, markets move. Quote, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." End quote. Buffett has 2 keys for evaluating a company. First, look at the quality of the company, then look at the price. Looking at the quality of a company means reading financial statements, listening to conference calls, and investigating the management. Then, according to Buffett, only with confidence in the quality of the company should you turn to the price for evaluation. If a company isn't quality, don't buy the stock at a low price. It's as simple as that. But is there another way to have conviction in a stock? Number 3, Bill Gross. Build trust. Gross's rule focuses on varying degrees of conviction in a company. Quote, "Do you really like a particular stock? Put 10% or so of your portfolio in it. Make the idea count." Good investment ideas should not be diversified away into meaningless oblivion. All investors know of diversification, not putting all capital into one stock. But as Bill Gross notes, diversification is a good rule of thumb, yet it can diminish your profits accordingly. Bill Gross believes in keeping cash in your account for buying opportunities when your research points to a real winner. Number 4, Prince Al-Walid bin Talal. It's all about patience. Prince Talal has made investments in Twitter and Snapchat and faced a test of his patience during the Great Recession. Quote, "I'm not a long-termer. I'm not a seller." Prince Talal has demonstrated recently what many of the best investors do to obtain their riches. Hold, hold, hold. If you have strong convictions and have done proper research, you should be able to hold for long periods of time and ride through any market events. Number 5, Carlos Slim. Focus on the future. His quote represents the mindset of the best investors. Quote, "I am convinced that all this poverty in Mexico and in Latin America, like it's happening in China, is the opportunity to grow. It's an opportunity for investment." End quote. Successful investors don't look at what's happening now. Instead, they invest now for what trends will happen in the future. They are always looking ahead and strategizing for the best ways to catapult their wealth forward. Carlos Slim believes that if you're chasing down short-term gains in a company or industry, you've probably already missed the big move. Instead of chasing, you should anchor your portfolio with companies that have a long track record of steady growth. The bottom line, There's a lot to learn from successful investors. Creating your own path in order to produce long-term results is necessary. Set goals and follow through, and adjust your strategies when necessary.
In investing, there's no called strikes. People can throw Microsoft at me and, you name it, any stock, General Motors, and I don't have to swing. And nobody's going to call me out on called strikes. I only get a strike called if I swing at a pitch and miss. So I can wait there and look at thousands of companies day after day, and only when I see something I understand and when I like the price at which it's selling, then if I swing, if I hit it, fine. If I miss it, it's a strike. But it's an enormously advantageous game, and it's a terrible mistake to think you have to have an opinion on everything. You only have to have an opinion on a few things. In fact, I've told students, if when they got out of school, they got a punch card with 20 punches on it, and that's all the investment decisions they got to make in their entire life, they would get very rich because they would think very hard about each one. And you don't need 20 right decisions to get very rich. 4 or 5 will probably do it over time. So I don't worry too much about the things I don't understand. If you understand some of these businesses that are coming along and can spot things on, if you can spot on Amazon, for example, I mean, it's a tremendous accomplishment what Jeff Bezos has done. And I tip my hat to him. He's a wonderful businessman. He's a good guy, too.
To close out this video, I want to bring up how I believe traditionally successful investors are being disrupted as we speak by a new wave of market movers, entrepreneurs. Take one of the greatest ones, Elon Musk, for example. Elon has built Tesla, SpaceX, and many other side ventures that will each be successful in their own rights. Elon, Bezos, and the other richest CEOs demonstrate how becoming the ultimate richest comes from owning and developing the most valuable companies in the world. While Warren Buffett takes his wealth and puts it on the line for companies to use, Elon puts his livelihood on the line for his companies. That difference is critical. And if those follow his behavior, it could mean that traditionally successful investors will be eclipsed by the smartest entrepreneurs. Anyway, just something to think about. I hope this overview of some of the greatest investors to ever live was helpful for you and maybe has given you a new way to plan out your financial future. Musk's strategy, investing only in companies he's built, allows investment in himself. It may seem too self-centered, but it's the best way to ensure that he is in control of his own financial future, a financial future that will fund a Mars colony. A few years ago, he said, quote, "Sometimes people think I am an investor or that I invest in things. I actually don't invest in anything. In fact, the only public security that I own of any kind is Tesla. But I do think Elon is an investor. He's just a new kind of one. So drop a like if this video was helpful to you, and subscribe if you haven't already. Until next time."